Okay, good afternoon, everybody. Today is Friday, October 13th, weekly take on the market. It is 1:45, so the market is about to close. Um, I am your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here in Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. I don't make buy, sell, hold decisions. Our sweet spot is research and education. Okay, market thoughts. Lots of stocks that I like to bring up. I'll probably skip the industry groups. I apologize. I'm a little pressed for time today, which is why I'm trying to get this video in right where we quarter to the market closes, but I doubt anything drastic will change in 15 minutes here. And then the quote. My Fridays have gotten busy. Usually Fridays is a good day. So somebody mentioned maybe doing the video on Thursday because he was curious about what I thought about the week, and so maybe I'll try that. I don't know. We'll see. Anyways, let's go to the charts, and this has been, for lack of a better word, the problem with the market is the bond market. It's been a lousy bond market. Maybe I'll pull up TLT later, but like historic. I don't think we realize how bad the bond market has been. And it's, according to B of A, it's the greatest treasury bear market of all time. It's just crazy, for that bad. And it's because interest rates have gone from so low to more nominal numbers. I know that the numbers shouldn't be that crazy. My first mortgage, I think, was 6 7/8 or something. It had a 6 handle, 6 and something. I think maybe they're 7 and something now. So it's not the number so much as how fast and the delta, right? When you go from roughly 0 to 7, that's I don't know. I'm wondering if that's a problem. And I think the market is always worried about it, which is why there's a lot of volatility kind of back and forth on whether they worry about something's broken or not. So uh, on the surface, though, the stock market's held up really, really well considering this. But to play devil's advocate, maybe that's the calm before the storm. I don't know. And in the end, we just read the tea leaves day by day, week by week. Are there stocks to buy? There's a lot of stocks. I say a lot. I mean, I want to own, in a perfect world, I want to own 10 stocks, 10 great stocks. It's never like that, but that's the reality of it. So I don't need, a bunch of great winners, but it's always easier if it gives you more room to miss. Like I think about the COVID bull market, how many great stocks there were, and I didn't own Tesla, and I didn't own Teladoc, or I think I handled Zoom pretty poorly, but man, there were some great ones. Livongo, C Limited. And so there's a lot of room to mess it up, so to speak, and do tremendously well. So we don't have that type of market here. So let's pull up the charts. And here's the NASDAQ. And I just will say that this line is so important because it just smooths everything out, the 50-day. And the 200-day is really important too. I think Paul Tudor Jones will say, nothing good happens below the 200-day. If you want the simplest thing, are you in a bull or a bear market? It's that 200-day. You can see how it lived below it here, and now then it's lived above it. But it's slowly, man, we're converging. We're converging big time. But see how when the market jumped above there's a fall through day, you rallied, and then this was the banking crisis, short-lived banking crisis. Silicon Valley went bankrupt. And, the market tried to go below the 50-day for a day or two, but couldn't. What a great tell that was, and how strong the market was truly to shake off that bad news. and you had a great run. Now, admittedly, it was very narrow, but there was stuff to buy. Nvidia, VRT, I could go on and on. There's stuff that Elf, Celsius, and so there it was possible to make progress in this. And then we break below the 50-day here. And the first break below it, you almost always get a snapback, and it snapped back, but it couldn't live above it, 3 or 4 days above it. Then you get another break, and now we're trying to get back above it. And you see how it's kind of getting weaker and weaker, right? So this one went above the 50-day. This one barely, it reminds me a little bit of this. See how it poked its head through there for a day or two and then resumed the uptrend? I don't know. It poked its head a day or two from here, and is it going to resume the downtrend? That's a distinct possibility. So the market's not great here. You probably want a little bit of exposure. I have some exposure. I do have some short exposure, but in my IRAs, I've got you can't really get short exposure outside of buying like the reverse ETFs like Tesla Q or something like that. So I have a little bit, but mostly I'm long. But my exposure is very little. I think the one advantage that we have as individual investors is exposure and position sizing. So I can be 20% long or 35% long or 42% long. I don't have to be a 0 or always 100. And I think that's the message I think the market is sending is some exposure, not a lot. In case it rolls over, I can easily reduce my exposure. And there's some stuff that's holding up. I'll pull them up. I've actually got 2 stocks that are up today on a bad tape. Now, they're not tech related. And so that helps to have like a balance. You don't always have to have Nvidia and Avago and Apple and Google, and there's other types of stocks that are doing okay. So I don't know. Again, I have to admittedly, I get bearish pretty easy. So take that for what it's worth. But I just don't love the overall market environment here. There are some stocks that I really like, and there's some stocks that I really hate. In other words, I think that I'm short. I think they're going down a lot. So it's kind of a weird setup. Let's look at the S&P. I gotta fix that. Well, when I say me, I mean the programmers. So it couldn't even get above the 50-day, right? And how about the Russell? Just shit, with all due respect to dogs, just a dog with fleas. And I think equal weight markets are actually down this year. So it's a very, very interesting bifurcated, crazy year this has been. It's been very interesting. I totally forgot that the whole banking crisis was this year. That's how much things have changed, how different the market has swayed so far in a single calendar year. All right, so let's jump into the stocks, because I really think that's where the best information is the stocks you own and the stocks you wish you owned. That tells such a great story, and I've got plenty of those. I've got stocks I own that are telling me a story, and I've got stocks I wish I owned that are telling me a story, and then I've got even stocks that I like VRT that I don't own that's telling a story as well, because that's normally a stock that I would want to own if I thought the market was going up. So let's start with let's start with VRT, might as well. So broke out of this base, and it looks like potentially failing. So that's information. It's not a good sign. This is one of the best stocks in the market coming out of a base. If it fails, you want to heed that information. So that's it's important information. Now, if you own VRT, it's not, weekly doesn't look all that great either. So daily and weekly, it's, you're down 3% if you paid the pivot. If you added, you're going to be down more. So I would say you probably need to reduce the add in worst case. So very, very, from an information standpoint, what's telling, it's not a good signal, right, on the overall market. Let's look at NVIDIA. So holding up okay. This is day 2 of a potential handle. I don't know if I mentioned this on the last video or whatever, but this looks really, really wedgy to me. Like it's just grinding, wedging higher, and that's kept me out of it. Unfortunately, because I bought the, what I had like a trend line like that, and I bought it, but I sold it really quickly, and for very little gain. And I don't know. This is the best stock in the market. It's a tremendous tell on the market, and it doesn't look bad. Like the weekly is setting up. It'd be beautiful if it builds a handle. You've got the blue dot, so there's nothing wrong with this action. Right? It went up, 14 of 17 days. It has the right to, so to speak, to go down for a day or two. So information, Meta. Now, Meta, like VRT, breaks out. Not a great base, to be honest with you. 312.87, I believe, is the pivot. So I think it's held the pivot so far, but another sign in the VRT category. If it can't hold, not a great sign, because it's been one of the best stocks. And the whole FANG universe is really starting to break apart. It's like all the continents a billion years ago. So you've got Netflix. This looks terrible, doing its own thing to the downside. You have Nvidia acting great. You have Apple, which is just okay. It's not great, not bad. Meta, which has been very good. Microsoft, which is very Apple-ish, just okay, not bad. And then you have Tesla, which this is another really big key for the market. So Tesla's building a really good pattern. I was talking to Rusha, and he's like, boy, Tesla's had a lot of bad news, and that's a pretty good looking pattern. And I was like, as somebody who's always looking to short Tesla, I hear what you're saying, Arusha. It's shaken off a lot of bad news, and the stock, should be lower on all this bad news, and hasn't. So far, it's done that. I think for me, I'd rather pay 270 than 250, because it might be a head fake. And so this is a great example of, if this does this over a number of days to weeks, not a good sign for the market, obviously, right? Captain Obvious. That's not nothing you guys don't already know, but it's a barometer for the market. One thing about Tesla, I was doing some research trying to figure out, gosh, what's the story here? But one thing that bothers me is the institutions. So JP Morgan large cap, they added to their position, but American Century has the tiniest position, and they've done nothing with it. And Harbor, the tiniest position, no change quarter over quarter. Franklin Growth, tiniest position, barely budges quarter over quarter over quarter. They're not, the institutions aren't adding to the stock. And then Fidelity Contra, which is one of my favorite, the tiniest positions, like just nominal. Again, why aren't they adding to this stock? Why aren't they increasing their position? It's food for thought, something to consider. Okay, what else? So CrowdStrike looks really, really good and is holding up really well. Now, there hasn't been a great pivot, and I'll tell you, based on experience, CrowdStrike never builds pivots. I've owned this stock many times in the last handful of years, and there was no pivot here, and this pivot was okay. I guess that one was okay. This one didn't work. That one didn't work. It's a very difficult stock as far as building a pivot. So it's gone up here, it built this flat base, which failed miserably, and so it's you kind of have to manufacture a pivot. I think, to me, I actually bought CrowdStrike here on this day because they came out the night before and gave guidance, which was really, really good guidance. And the stock tried to go up, and then gave it all back, and I got stopped the same day. But then it came back again, and then when the market righted itself, you get a really powerful day, so it really showed its stripes that day. So this is a good one, I think, and it's in the right area. Palo Alto, now, it's given back a little bit. Zscaler looks very, very similar to CrowdStrike. And so the group, Computer Software Security 23, and it's a group that I can wrap my head around as far as like, why. Like there's a narrative to this group. You could see how like the world's always going to need this type of stuff. In fact, I just got a letter from somebody. There was a breach and they offered me free monitoring for a year from Knoll, I believe. And so it just never ends, right? So the security aspect is very I like that. I like that narrative. I like that story. It's very Can Slim-ish. And look at the earnings and sales: 57, 84, 106, 48, 42, 37, decelerating. The only thing I'd say about the group in computer software security is, and I'm not saying it doesn't exist, but I'm not certain who the leader is. Who's the Apple? Who's the Google? Who's the NVIDIA of this? It's a little bit difficult. Is it Palo Alto? Is it CrowdStrike? From a fund standpoint, let's see. You've got Allspring has a small position. Franklin Growth has a small position. So, I'd like to see a little bit more there. But I think the exposure in this group is probably one of the areas you can be in. Let's go to the Lilies and NVOs. So Lilly had a great, almost textbook bounce off the 50-day. I love how it undershook below and then came right back. You've got your first sell signal since that bounce. That's a pretty nasty day. Not a bunch of volume, but price-wise. And that's because NVO had good guidance today. And helped push Lilly up, but then it kind of gave back a little bit of that move. But both these stocks are institutional quality and acting, if you're a longer term holder, they've done nothing wrong. They haven't given any type of signal in that regard. In the kind of the oil and gas area, you've got Tidewater, which is, I think, one of the leaders, but there's no place to really buy it. But if you own it, you do nothing with it. Frontline is acting really well, although a little bit Lilly-ish today, but it's gone up, 5 days in a row, probably due for a pullback. TRMD is in that same group. It tried to break out today, not much of a move. For full disclosure, I do own both those. TNK, interesting. Sting, I think, retook the pivot today. Yeah, so you have breakout that didn't work, but then this one back above. That's usually pretty powerful. Like if it breaks down, it should go down and doesn't. That's usually a pretty good sign. Look what LPG did. Like it broke down. Wow, that should be bad, right? Boom, just explodes right back. So this group is interesting to me. I like the big earnings and sales, and the group strength is strong, 33. Not a lot of sponsorship. You're just not going to find any sponsorship in these stocks. I don't know why. I don't know why. I wonder if one day it may come, but right as we sit here, nothing. And Vertex. So Vertex is very interesting to me, coming out of a base, relative strength line, new high. Now, it's kind of stock that doesn't really go anywhere, right? So it breaks out, goes nowhere, breaks out, goes nowhere, breaks out, breaks out, breaks out. Just not a whole lot of nothing. So you might, for something like this, talking to myself, might need to be a little bit more patient. But they had, I think, a fast track on some kind of opioid, or it's not an opioid, it's a safer pain medication drug. And that it reminds me very much of like the Lilly and the NVL, where there's a catalyst, a narrative, a story. I don't know how that's going to play out, but imagine how many people have acute chronic pain that would love to have a safe, or whatever that means, option. This is a great company too. I've owned this stock many times before, and look, it's made a big move, so I don't expect it to go to the moon, but it's really been just like a long-term leader type stock. And sponsorship, MFS done nothing with their position. Contra increased ever so slightly last couple of quarters. So there's that. I did say I was going to mention the bond market. I apologize. I moved away from it, but let's look at TLT, which is kind of a proxy for the bond market. But remember, the TLT always is just constantly buying 20 years. So it's your a 20-year matures and a new 20-year comes in, and it's 20% off the 52-week high. But if we go to in March, kind of the COVID move was tremendous to the upside, 179.70 and 87 to the low. Wow. It's in half. It's in half. And I do hear a lot in kind of the podcast world, the Twitter world, of people saying, boy, bonds sure look attractive here. I've never bought TLT in my life. I think I'll buy TLT here. And contrarian in me thinks that can't be a good sign. So I'm curious about how this plays out. It should be it's definitely going to be interesting, and will definitely influence the market. I think that's it for stocks. I think I did enough. Is there anyone? The thing I love about the market is how kind of the story. So like the Ozempic thing, I don't know how many people are actually using this drug, but like look at I read somewhere somebody was talking about he was buying CDS, credit default swaps, on fast food companies, because one, the drug, probably people are eating less. Maybe that's it. Small universe so far, but maybe this person believes that number is going to only grow. But also in inflation, right? Prices for food is very noticeably higher. I notice it. I've got a family of four, and I notice it. I mean, it's like, wow, I notice it. And so it's hurt these stocks like McDonald's. That looks terrible. And Jack in the Box. Look at Jack in the Box. 1, 2, what's that? Down 12 or 13 weeks. So really, really acting poorly. Okay. So let's jump to the quote of the week. Victor Hagani was on a podcast, and he wrote, I can't remember what the name of his book is, something billionaire. But if you search his name on Amazon, you'll see the book. I don't have the book yet. I think I might get it. I'm curious about it. But he was a partner at Long-Term Capital Management, and he talked about the what versus how much, which I think is like the main thing to doing this right. So if you have too little of something, then it doesn't move the needle. So if you put 1% of your account into all your ideas and you catch NVIDIA, honestly, if you're up fivefold on it, you haven't really moved the needle. A whole portfolio is up 5%, barring, all other things being equal. But if you put too much in there, you can't hold it. You get shaken out. And that's kind of what happened to Long-Term Capital. All their ideas were fine. Everything they bought pretty much did what it was supposed to. They just had too much of it. They were levered, and they got taken out, and they couldn't survive the move. So there's a fine line between too little and too much. Once you've identified what you think are good investments, you have to decide how much of these to own. 99.9% of the discussion is about the what question. I agree. I think a lot of people spend hours and hours on what to buy. They want the super screen. They want the perfect cup with handle. They want this, they want that, right? We feel that the how much question doesn't get enough attention. You really should focus on how much. There's a sweet spot for everyone. I think from a standpoint of being able to withstand the noise. And so you want to have enough that you don't get shaken out, but not too much that you can't handle it. And so you have to, I would spend some time, and I've probably said this before, on that. I always like to start with 10% position just because the math is easy. And I try to replicate what I'm doing in all my accounts. So all my cash accounts, pretty much. So my kids' cash accounts, my IRAs, my wife's IRAs, my family money. And so I just get out the calculator. I want to buy CrowdStrike. What's 10% of the Scott's Roth? Boom. What's 10% of my wife's Roth? Boom. What's 10% of my wife's IRA? And I have a lot of accounts because I believe in the system. And so my kids have Coverdales and the whole, I'm not going to go down the tax-free or the tax deferred path, but it's big. It makes a big, big difference when you don't have to pay taxes, the power of compounding. At least you're deferring the taxes. Let me make sure I'm saying that right. Except for a Roth, which is taxed money that goes in and tax-free that comes out. A beautiful, beautiful product. So I like 10% just because the math is easy, and then I can go up from there. I can add, I can get up to, and I've been over 25% positions sometimes in some names, but I've found that that's kind of I'm reaching escape velocity, right? I'm shaking a little bit as far as handling the position correctly. So for me, I find anywhere from 10 to 25 is kind of the sweet spot for me. And depends on the name, and it depends on how well I'm doing and what I think about the market and other names. But I like to use that number. Now, if I'm not trading really well, a lot of people are disciplined. They'll stop trading. I'm not very good at that. I love the game too much. So instead of trying to do that, I cut that in half. So I'll go to 5% position. If I'm wrong on a 5% position, let's say I'm wrong 10%. I really mess up the stop loss somehow. Well, that's a 0.5% on the whole account. So can I make that up? Sure. If I did it 4 times in a row, I'd lose 2% off the top of my whole account, and that's should be survivable. So think about the how much question. That's food for thought for you guys for the weekend. Okay, next week I'm out of town for the Founders Club event. I will do a video on the road if the market warrants it. If it's acting like this. If it's kind of a non-event week, then I will pass for next week. Contact information, marcussmith@investors.com, 800-424-9033. Thank you, everybody. Have a great weekend.